Hey guys, this is Scott Horn with OFN Processing Services and Texas Pride Lending, here to talk a little bit about the RMLO world. And it's really an RMLO versus a loan processor versus a title escrow officer versus legal, and who's who does what in a transaction. So if you like it, take a minute, like the video, guys. Make any comments, we'll get back to you on those. Join us on our YouTube channel as well. So who does what, where, when, why, and how? So really there's a tier system. When we go to contract to sell a property, typically to a home buyer, we get a contract executed first. That contract gets delivered to the closing agent. That could be a law firm, it could be a title company. Here in Texas, it better be a law firm or a title company so you can comply with Senate Bill 43, the RAP lending bill, because it says it mandates you must close these transactions in a law office or a title company, or they are void, not voidable, void. So it goes to that closing agent. They act as the escrow officer along the way. So the escrow officer's job is to open the title, get into commitment and review that, and see what is out there that needs to be cleared off the title, or what is going to be left on title and wrapped around if you're doing a wraparound mortgage. Of course, if you're at a title company or maybe a law firm, they can of course order title insurance for you for the buyer, which is ensuring the buyer is getting fee simple ownership of that property, subject to any liens that may be left on the title and put over to Schedule B. And guys, that could include the mortgage that is existing on the property. Maybe you bought the house subject to and doing a wrap loan in the back. It could involve a solar panel UCC lien that's on Schedule B. Even though that solar panel lien isn't technically a lien on real property, it is out there kind of hovering around in the netherworld. And so title companies today put that on Schedule B as an exception for notification to the parties that is out there in existence. We have the RMLO and the loan processor. Now, those can be the same thing. They can be a little bit different. If you're working with a mortgage company, you're going to have the loan officer who's going to be the RMLO, who's going to be that guy that helps to process not process it, puts the deal together for you, puts you with the right program, gets things ready to go, puts you with the loan processor to get the loan processing side going also, and they help you navigate the mortgage itself. The loan processor, on the other hand, is your document gathering firm. They're the guys that are going to get the application put together for you. They're going to ask you for your tax returns. They're going to ask you for a verification of employment, verification of mortgage. They may ask you for bank statements or other income sources that are out there in order to support the income they need. You know, are you a 1099 employee or are you a W-2 employee? They'll ask you for those documents. The things that they need to get in order to support the income so that you qualify for your loan, whether it's a creative finance type transaction loan or whether it's a traditional mortgage loan in either scenario. The RMLO is going to gather this paperwork. They're going to help provide you the proper disclosures required under RESPA, the Real Estate Settlement Procedures Act, under any HUD requirements that might be out there. They're going to give you all the appropriate disclosures that are required for any other mortgage along the way, so you have a chance as a home buyer to have full disclosure of what it is you're doing and going through. Now guys, I get it, because I'll tell you, most of these deals that are sent out are never read by anybody. The only thing that usually gets read might be that loan estimate, so they have a pretty good picture of what it is they're borrowing, what the interest rate is, what the payment amount is, what the closing costs are if they have those up front, and things of that nature along the way. Again, in today's world, at least in Texas, most RMLOs are going to what we call is the correspondent lending, where they're taking that liability off of the investor's shoulders from potential liability of having to be registered as a RMLO themselves in a licensed mortgage company, because no one wants to do that in the investor world unless you're actually in the RMLO sphere. So I really think that understanding some basic premises, who a RMLO loan officer is deal one. Who the RMLO loan processor is the next thing that's important to know. Who the escrow officer is, the closing agent is important to know. If title insurance is involved, who's that title company getting title issued? And you can go one step further and go, is there a real estate lawyer involved in the transaction in some format? And who's the realtor involved if there's a realtor involved in the deal too, to do it? But knowing who is on first, what's on second, I don't know who's on third. Sometimes it feels that way along the way. For all of you youngins who just heard me say that, that's Abbott and Costello. Go look it up. But just knowing where to go and what to do and who is playing what role is important in the real estate transaction. It just helps you to get through your deal quicker and easier along the way. So I hope you found the video helpful, guys. If you did, take a minute and like it again, please. Don't forget to comment. Come see us on our YouTube channel and join up, and we'll see you guys next time.